Hello, my beautiful people. Here we are again with another episode, which is Reality of the Week. And in today's video, I would like to talk about something that I earlier on discussed in a video which I named Tips for Trading or Trading Tips. I told you that there are three important things that every trader, whether you are a beginner, you are a pro, or you are an advanced, these three things are needed for you to become a successful trader. And if you remember, I made mention of a trading strategy, risk management, and then also your trading plan. I talked about these three things. Now, in these three things, I'm going to talk about one, which has to do with risk management. Now, under risk management, we have about 3 or 4 things that you would have to take note of when it comes to risk management. One of them is the lot size that you use. The second is leverage, your account leverage. The third one has to do with your take profit and then your stop loss. These 3 things or 4 are the most important things when it comes to risk management. I repeat, your leverage, the lot size, your take profits, and your stop loss. This is what makes up what we call risk management in Forex trading. Now, out of these 3 or 4 items I have mentioned, I am going to discuss only one today. So please take note of the things I have mentioned. I repeat, I want you to write them down because they are very important. I know where I'm heading to. Now, I have said in the tips video that every trader in this world will need a trading strategy, risk management, and then a trading plan. 3. It is constant. Whether you like it or not, you need them. They are very important. Then, in today's video, I want to talk about risk management. And in risk management, I'm telling you that when it comes to the word risk management in Forex, we are talking about your account leverage. So under risk management, we have account leverage. We have the lot size that you use. And then we have your take profits and stop loss. This is what makes up what we call risk management. So out of these 3 things or 4 that I have mentioned, I'm only going to talk about leverage in this video. Leverage. So when we say you choosing a leverage for your account, what does that mean? Now, in simple terms, in my own definition, to make you understand, what it means is that you have an amount of money, but the broker is asking you that what room should it give you in terms of managing the money you have in your account. And here, when I talk about the room you want the broker to give you in terms of managing the money in your account, we are talking about how many space or how many trades will you want your broker to allow you to take on that money that you have in your account. I don't know if this makes sense. If it doesn't, let me say it another way. You have money in your account. Your broker is asking you to tell them how you will want them to give you space in operating that money. Whether you may want to take multiple trades on that account on using that money, or you want them to limit you as to the number of trades you can take when it comes to the money that you have. I think this should make sense. The broker is asking you, how many trades should they allow you to take on your account? Maybe you have $100 in your account. Your broker is asking you, how many trades should they allow you to take using that $100? Does this make sense? whether you want them to give you room to take more trades on that $100, or you want them to restrict you to take only a few trades when it comes to that money. That is what the broker is asking you. So the broker will give you different leverages or different type of leverage for you to choose one. And so when it comes to broker leverage, it ranges from 1:1. Let me share my whiteboard with you and then we'll do this. Okay, let me share my whiteboard with you quickly so that we look at the leverages that the brokers normally give you. So as my whiteboard is loading, the main question here is the broker wants to know how many trades you want them to allow you to take using that money. Whether they should restrict you, let me clear. Whether they should restrict you, I want to clear my whiteboard quickly. Whether they should restrict you as to the number of trades you can be able to take, or they should give you more space in taking trades on your account. That is what is called leverage. So most of the brokers, they may give you a leverage like maybe 1:20, 1:30. I'll enlarge them so that you can see. 1:30, 1:30, 1:50, 1:100, maybe 200, 1:500, 1:1000, 1:unlimited. So let me make this huge so that we can all see. So a broker may give you something like this. Okay. Should I kind of space it out like this and see? So a broker may give you something like this. Just a second. I want to make it look wide. I'm sure you can see now. All right. So a broker may give you some leverages like this. 1:1. There is even 1:1, 1:20, 1:30, 1:50, 1:100, 1:200, 1:500, 1:1000, 1:unlimited. Okay. Now, the broker is asking you to choose. The less the leverage, okay, the lesser or the less the leverage, the least amount of trades you can take. And that is why, if most of you have taken notice, some of you deposit sometimes $100 in your account, and then you take a trade. Maybe you have taken one trade with maybe a lot size of 0.05. And you have seen another trade, you want to take another trade, and then the broker tells you that you cannot take another trade. Although the first trade you have taken is not in any huge loss, and you still have enough money that can allow you to take other trades. But the broker is saying, no, you can't take another trade, any other trade. Or maybe you even have $10 in your account, and you want to take a trade with a lot size of 0.01, the least lot size. And then your broker tells you that you do not have enough funds in your account. Meanwhile, you have $10 and you are using the least lot size. And the broker is saying you do not have enough funds in your wallet or in your account. Maybe your account balance is $100. You have taken one trade, you want to take another trade. Your broker is saying you do not have enough funds in your account. And you are asking yourself, why? But I have funds in my account. Why is the broker telling me that I do not have enough funds in my account? The reason the broker is telling you that is because you have selected a certain leverage. You have given them instruction as to how they should limit you when it comes to the number of trades you should take on that account. So the broker is going according to the instruction that you have given to them. They have given you samples of leverage to choose, and you have decided to choose the one that they are using or they have added to your account. So you cannot complain. If you want to complain, then unless you go back and change the leverage to a bigger one. When you change the leverage to a bigger one, then there may be enough room again to take another trade. But when you don't change that leverage, you will be restricted. You cannot take multiple trades because that is what you chose, or that's what you selected when they gave you the options. So the question here is, under risk management, they are trying to protect your account based on the instruction you have given them. So there are brokers that have different kinds of leverages. So today, the question here is, what type of leverage should you go for? Okay. Now you have seen the leverages. What type of leverage should you go for as a trader? Should you go for the smaller leverages or the bigger ones? Now, the smaller leverage has advantage and disadvantage. The bigger leverage also has its own advantage and disadvantage. So let me explain the two to you. Then you can make a decision as to what leverage you should use. Are we good? Okay. Now, when it comes to smaller leverage or leverages, like 1:10, 1:100, 1:50, even from 1:100 upwards is a bit huge. Okay, 1:30, 1:20, those are the smaller leverages. The advantage for these smaller leverages is that they will restrict you from taking multiple trades or more trades on the account. They will not give you space to burden the account with multiple trades. So in that case, when those trades you were thinking of trading and you wanted enough space, if those trades turn out to be in loss, the fact that they have not given you the space to take them will save your account. I don't know if you get this. The smaller leverage is giving you just a small space to put in just 1 or 2 trades. You cannot go with more trades. The same way, the small leverages will restrict you in terms of what kind of leverage, lot size you can use. The leverage will determine what kind of lot size you can use, and then what kind of or number of trades that you can take. So the smaller the leverage, the fewer the number of trades you can take. So if those trades should go even against you, the fact that you had the opportunity to take only 1 trade will protect your account some way. The disadvantage is that maybe those trades ended up in profit, but your account did not allow you to take them. In that case, you may be making lesser profit, because if those trades were allowed, you might have made huge profit, or you would have gotten huge profit. But because the smaller leverage didn't allow you to take multiple trades, the trades went into profit, but you couldn't take them. You only watch the chart and see that, oh, this trade has gone into profit, but my account didn't allow me to take. Maybe even the trade that your account allowed you, the first trade that you took, maybe even ended in loss. So you might be biting your finger and say, oh, I wished I was able to take the second trade. Maybe the second trade would have even cleared the losses of the first trade, but your leverage didn't allow you. So this is the disadvantage for smaller leverages. Sometimes the smaller leverages, you have small money in your account, they may not even allow you to take a trade at all. So those of you who have money in your account and you try to place a trade and they tell you you do not have enough funds, it is because of your leverage. The leverage that you have chosen cannot allow you to even take a single trade on the money you have on your account. So you see the advantage and the disadvantage in terms of smaller leverages. Good. Now, let's look at the advantage and the disadvantages of the bigger leverages. When you choose a bigger leverage, maybe from 1:100, 1:200, 1:1000, 1:500, 1:infinity, or unlimited. What that also means is that they give you enough room to take more trades. But assuming those trades that you have been able to take, if they should go in losses, they will wipe out your money in your accounts so fast because you have taken more trades on the account. So more money is going. So if the trade should end in a loss, your account will end up in huge loss. So huge leverages can give you huge losses if the trades go against you. The same way, that is the disadvantage. The advantage here is that huge leverages can give you more profit if those trades, multiple trades you have taken, should go in profit. Then it means you are going to get more profit. Do you get it? So that is the advantage of higher leverages or bigger leverages. So whether you choose the smaller leverage or you choose the bigger leverage, they all have their advantages and disadvantages. So now my question is, what kind of leverage should you choose? Will you want to go for a smaller leverage or you want to go for a bigger leverage? What kind of leverage will you want to go for? That is the decision I want to leave for you to think about. If you should ask me, the Forex market is a very risky market. It's a very risky market. And you can win, you can lose. So left to me alone, if I have opportunity to take more trades, I'll go for that one. If I lose, fair enough. If I win, fair enough. That is me. I'm not saying take my decision as your decision. You can also choose your decision. But if you ask me, the Forex market or whichever market you are trading is a risky one. They will tell you 90% of traders lose money. So you could be part of them, the 90, and can be part of the 10. So if I have an advantage to take more trades, if I lose, I lose. If I win, I win. I would rather want to go for that. But if I take a small leverage and I lose more today, lose more tomorrow, lose more the next day, it will still take me back to the same point where all the money will be gone. But maybe it might be today that you lose, tomorrow you win. So that could be better than just losing everything today. So that also makes sense. So I want to leave it open to you to now decide what type of leverage you want to use for your trading account. So anytime you want to take a trade and the broker tells you that you do not have enough funds or you cannot take additional trades, it is because the leverage you selected is restricting you, and that is why. So leverage is part of risk management. It helps you to manage your risk. So the choice is yours to choose what kind of leverage will be important to use on your account. Now, when it comes to lot sizes, I have already talked about lot sizes in terms of their values. So that aspect of risk management has also been dealt with. And then when it comes to stop loss and take profits, I have also explained stop loss and take profits on this channel, Leading Forex. So that aspect too has been dealt with. So I think it is only with leverages that has not been dealt with. So I am dealing with that now. So when it comes to risk management aspects, I think I have completed that chapter. The chapter of leverage, the chapter of lot sizes, and then take profit and stop loss. I think I have concluded on that topic. I have ended that chapter on risk management. So it's left with the other two. It's left with the other two. Trading strategy and a trading plan. In other videos, we'll be looking at those things. So from today onwards, you will be able to know the kind of leverage you are using and then its advantages and disadvantages. My name is Kofi, your admin for Leading Forex YouTube channel. If you want to contact me one-on-one, if you want to ask me questions, if you also want to find out anything from me, you can send me a message on WhatsApp. A lot of people are using this channel name to create their own channels, to dupe people and to illegally take money from people. So that is why of late I am giving out my number. If the need be for you to call me and see me and be sure you are dealing with me, please do. You can call a video call to be sure it is Kofi Dollar you are dealing with. So I want to give you my number on which you can call, or you can WhatsApp me. The number is +233 246 136609. +233 246 136609. That is my number on WhatsApp. When you get in touch, you can call if you have to. But please, do check the time in your local time to be sure you are not calling me midnight. All right? Make sure you are not calling me midnight because I have a family. I need to at least have some privacy for the family also. So please call me when you know it is appropriate and let's talk, or WhatsApp me, let's chat. You can even leave me a voice note anytime I come across it. I will listen and reply you. Like this video, subscribe to this channel. More issues and more info are coming here on this channel. My name is Kofi once again. I love you all. God be with us.